All right. Good morning, good afternoon, and good evening, everyone, and welcome back again to the live session. It is about 2:30 a.m. Eastern Standard now, just about UK live, and I think let's get started off a few trade setups that we would like to touch upon. In fact, there are six charts that we are looking. I think let's try and touch upon all of them, beginning with the euro chart setups. If you have been following me in the last few sessions, we have been expecting a bearish kind of a reversal in the euro. Let's see how things are shaping up now. We have gotten a reversal from almost a desired price action 1963. I think it just remains shy by a few points of a strong Fibonacci convergence. Let's look into that, brothers. Let's get started with the euro now. As far as the wave counts are concerned, we still believe that uh, wave 1 is ready, either wave 1 or wave A. No change there. I'm not labeling, but let's use the arrows this session. The rally until 1850 was termed as wave A, can be termed as wave A. Then a short bit of retracement, 38.2% of the rally, and also hitting the backside of the trend line here. And that was a good setup actually. We wanted to go long, but we could not materialize exactly. We were waiting for prices to drop towards 1700 levels and to go long. That is past now. I think we have initiated shorts on the way to this rally here. If you look at the channel settings, or if we try and do a channel line, prices have just remained a bit shy. I mean, by a few points. Unlike the dollar index, which has created a wonderful test of the channel. I'll bring up the chart in a few minutes, maximum couple of minutes here. But still, the existing setup looks good on the downside. That is the entire retracement, and the counter trend extensions which is producing a good Fibonacci convergence around 1977. So a potential zigzag has already formed. That was we cannot term this as an impulse, because wave 4 actually is entering the territory of the first wave, first proposed wave. Assuming this to be a leading diagonal, in that case of wave 1, or it's just about a corrective drop, ABC, X and ABC, right, either of them. So it's going to be either a 3, 3 and 5, or it's going to be a 5, 3, 5. In any case, bears should remain in control from here on. Just a quick review on the daily chart. Isn't it looking good? That's the entire rally from the beginning of the 2017, and please watch out that trend line resistance. It's giving way to the bears actually. It's dropping lower each day. Backside support is now seen at 1661. The more lower it goes, more angle it gets. Should be looking to drop even below 1550 levels going forward. Right, so that's the daily chart. Maybe we've either got waves 1, 2, 3, 4, and 5. In that case, we are going to see a wonderful drop towards 1.1. Case 2, as an alternate, if it is not 5, it could be wave 1, 2, and 3. In that case, at least we might have got a wave 4 bottoming somewhere around 1480 or maybe 1400 levels going forward. All in all, as a subset, Euro looks to be good to be sold on rallies from here. I think maybe prices may test 1977 once, but that should be it. All right. And in case if it doesn't go above yesterday's highs, a meaningful top is already in place. All right. So please continue holding shorts in the euro. If you are joining fresh, you might want to sell intraday rallies between 1940 1920, and the stop loss remains the same at 1.2092 right now. That's the resistance, good resistance. Immediate is at 2030. You might want to place your stop considering your risk reward ratios. It's two places to place your stop losses. Alright, so let's move on to the next dollar index. Dollar index has not let us down actually. I would say a wonderful after producing an impulse wave 1, 2, 3, 4, and 5. What it has done is a potential Gartley, as I've been talking about. Gartleys are actually traps. They give us a feeling that the trend is changing, but it is actually not. So no change, just a quick update in the dollar index. 61.8% mark bounce on the shorter time frames. Maybe it's just carving out the first boundary, and watch out for a retracement. Let's go on an hourly chart to confirm. It could be forming the first boundary. Maybe it could retrace down towards 60 levels again, 92.70. Sorry, let's go even lower. There you are. If at all, by any means, if it's wanting to drop lower, intraday drops can be seen towards, let's do an retracement, 92.70, brothers. So by chance, if you're just joining or fresh, if you would want to contemplate taking trades here in the dollar index, kindly look out or watch out for the 92.70 mark and take longs over there again. Extreme short-term traders, I've given swing trades on our Telegram channel, but extreme short-term traders, if you are wanting to play both sides, then you might want to take some profits short-term around these levels, or partial profits if possible. Then again go long around 92.70. That could be another trading strategy. But if you're looking for a swing kind of a trade, there's nothing to be done here. Please remain on the long side. Look to go and add further. On a retracement lower. Okay, let's talk about the supports and resistances. I think we've got a major potential bottom formation. This is not an exact support right now, but a potential support around 92.50. Extreme, so if you want to take an extreme tight risk, you might want to stay below, just below 92.50. Immediate resistance, all right, that has already been taken out. A short-term resistance around 92.80, which is a good sign. Bulls are registering themselves that they are back. Next resistance should be around 93.30. That should be the next target where the bulls want to go and hit. All right. So all in all, dollar index, please remain on the long side. Look to buy on dips as well. That was amazing, isn't it? Gold rallying towards 1299 levels just after the New York live session was done, and we were expecting and anticipating maybe one more high close enough to the 1300 mark. Still, I would say, brothers, don't take this for granted. Gold, until it breaks this trend line. Okay, let's understand the wave counts for those who are just joining. Point number one, we have an impulse down already. We are just waiting for a corrective rally to terminate, maybe as a flat or maybe as a running flat. Believe it or not, if it already done a running flat, then we have a top in place already around 1298.99 levels. But I think bulls are going to attempt one more high towards 1301, maybe 1304. Just complete a flat wave structure and then give it in to the base. Alright, so just in case if you have placed your stop losses very tight about 1306, I would humbly want to request you to push it a bit higher around 1309, 1310. Alright, if your equity managements are allowing you to do that. If it is not allowing, let's remain where we are, and we will take a call again if in case we get stopped out around 1307. But if possible, and this habit is actually good, but it's easier said than done. Once you decide your risk management ratio per trade could be 1 to 2%, you would be better off on a long-term basis if you can stick to that. Alright, so all in all, the wave structure looks good for gold on the south side. That's the first wave, A, B. Either B has formed or B is likely to form maximum around 1304, 1305, 1306. That's the resistance zone now. And if it is a running flat, it's already done yesterday. It's going to go lower directly from here. Bottom line, what confirms, brothers, that it's already done? Let's say a break below 1285, which is immediate support for now, I think. But once it breaks below that, you can draw a trend line actually on your screens or charts. That's not exactly a trend line, but yes, a support line for sure. A break below that line around 1290 mostly would identify that okay, a potential top is in place, but a certain break below 1285 confirms. Alright, so that's the scenario for now. Gold looking good on rallies as well, to be sold on rallies as well. We might have just got enough time to touch base on the other charts as well. Crude oil. Okay, crude oil, if you are wondering what wave 4 we were talking about of the higher degree, I'm sorry, that is a trend line actually. We got wave 1, wave 2, wave 3 extended, and wave 4 is kind of just terminating. It is either done or it should be rallying maybe slightly higher towards the 61, mid 61 levels, 62 odd levels. We have suggested stops to be around 61.50 plus. So if it doesn't rally over there, we are good. If it does and stops us out, we are again looking to go short around that price. But this is what I was talking about. Wave 1, 2, 3, 4 and wave 5 should be taking us all the way below 26 levels. If you look at the short term structure, this is as in, if you are a conservative kind of a trader, you won't be taking unwanted risk at this point in time. Please watch out for a break below 55 here. Once it does, I think we should be good. Should be forming. Watch out for a head and shoulder reversal as well. A drop here and then a counter trend rally back again around 57, mid 57 levels, and then boom. That is what we are looking for. The setups in crude oil and pound. Let's start with the 4-hour chart. A quick review on the wave counts, potential wave counts, wave 1, wave 2, and then it is the entire drop can be considered as wave 3 if we look at it, or it's already an impulse, whatever. But that thing is definitely corrective. And we don't want to get too much into the nitty-gritties, but it's also, it could be wave 4, it could be wave 2, not entering the territory of wave 1. Until it doesn't do that, we are good with both scenarios. What we would like to target is 2800 levels, brothers. And I think more potentially we are working out the 4th wave actually, which is turning out to be a slight complex. Wave A, wave B, and wave C, terminating as wave 4. Wave 1, 2, 3, wave 4, and the 5th wave should be going quite a bit lower towards 2800 levels. That confirms one major boundary on the south side before it produces a meaningful reaction on the meaningful retracement on the north side. All right, brothers. So euro looking good on the short side. Sell on rallies or remain short if you have been done that yesterday. Euro, pound, gold, crude oil, all on the short side, looking good on the short side, except for the dollar index. This might just be a good setup for December, actually, for a potential dollar index rally. All right. So if you are more interested about getting live trade setups, please consider joining our free channel. The name Japee, and you also want to look out for the website. It's just a page created, very humble beginning, japee.business.site. This is being an honest attempt to form a traders group out there. Alright, so I'll be coming back again after a few hours during the New York live at 8 AM Eastern Standard. Until then, thank you again for joining me online, brothers, and good luck to your trades. Until the next session, please take care and God bless. Goodbye.